Apologies, Gurmeet, to just stop you there. I'm going to quickly cut across to the conversation we're currently having with DP Singh from SBI Mutual Fund.
Experience of 2008 Lehman crisis or GFC crisis has taught us that the US financial system, when it blows up, when it starts like a spark and then it really becomes an explosion there. So could this be a repeat of 2008, or this is going to be a minor spark and the fire right now is not going to be starting? Interesting. Thank you for joining us. Enough and more has been done about what has led to this collapse of the bank. Let's connect the India dots here. What does this mean for India?
See, there are two things, Nikunj. If we look at the earlier crisis which happened in 2008, that was a credit event. That was definitely a credit event. This is a asset liability mismatch issue. And asset liability, we are really, really surprised at how this is being done in such a manner. There's a huge, huge asset liability mismatch. When we look at India and Indian banks, I think our regulator is doing a great job, and there's no such big asset liability mismatch in Indian banks. That's number one. Number two, as far as credit is concerned, our position has improved over the period of last, I will say, 9 to 12 months. It has improved much, much better. And the Indian businesses are doing so well. Most of the delinquencies which are there, people are ready to or already paid back or they are ready to pay back. They are working towards that. So all those things are favoring our economy. I don't think there will be much impact. But yes, when an economy like US is in trouble, it has an impact everywhere. It's impacting our equity market also. But of course, equity markets was always being said that it's overvalued, blah blah blah, and there was a trigger required for the corrections to happen. So I think enough has happened. I think whatever needed to be happen, and we have got the fair valuations now. So I think the future is quite bright from here on.
When the subprime crisis hit us, it was in 2007.
Yeah.
The term financial experts used that time was decoupling. That what is happening in US will not happen in India because the economies are decoupled. I understand that in theory we are decoupled, but when there is a leverage unwinding in the world, the decoupling becomes recoupling.
Yeah.
So isn't that a valid fear?
Uh, I think it's again it's from recoupling to decoupling kind of thing. Earlier it was decoupling to recoupling, but when we look at the instances what is happening in India, how our institutions are working, how the things are better, so that I think we are actually a sort of decoupled. I will not say that recoupling is happening, but see, we are a global economy now. So saying 100% as we have decoupled is impossible. So Indians also are investing outside India. What is happening in US is affecting Indian investors also, so on and so forth. And people all across the globe they are looking at India also. So from equity side, as I said, we have come valuations come down a bit, and we are near the fair valuations. So still there are some stocks which are still very very costly, but the a good respectable correction has happened. So we should not be worried about that.
Indian markets frankly have given no returns from last 18 months now. The positions are light, the retail volumes are down 40-50% because no one's made money, and that's how retail investors are. They don't make money, they don't come. Do you think the the silver lining in this global sell-off is that the market positioning was very light and माल नहीं है किसी के पास, to put it simply?
या वो सही है आपकी बात. पर उसमें अगर आप देखो ना देखो उसमें ऐसा हो रहा है कि yes, people have not put additional money. The people who have put in money earlier, they are still sitting on profits. So if there is no return in 18 months, even the money inflows are also very very low. And SIP investors, since they are putting in a long term for 5 years, 7 years, they are actually averaging. So it's good for them. So every rupee cost averaging is actually happening in a practical way. So that's what I'm saying, and I mind it. This is the global success story. The Indian SAP story is like a UPI. When nowhere in the world, wherever we go, whenever we go to our joint venture partner or in any other geography, this SAP story has not could not be exploited. But we have been able to do that, and still it's growing. So I think most of the investors are not in a very very bad situation. That's exactly what in the last 1.5 year, not lot of bets have been taken on the market. So it's only on the numbers. I mean, optically, it's looking at people have lost a lot of money, but valuations have come down. There's
There's
no
one
doubt
net
about
number of SIP, which is a heartening number, 13,000 to about 15,000, depending on the month you're looking at.
Yeah.
Feb had less months, so the number looked weak. January had more months, it looked good. My question is that what is the trend within SIP? Uh, are you
Within?
seeing within SIP,
Okay.
which is that are new SIPs getting added, or existing folks are cancelling, but new investors are coming, so the net number looks good.
Yeah, you are right. The earlier numbers, some SIPs are getting stopped. Some SIPs we are getting more money. But now it's earlier it was like a campaign, SIP. Now it is the quality of number which will matter, because if you look at it, 5 years ago also the average ticket size was in between 2000 to 2500. Even now with the per capita income going three times in last 10 years, so our SIP ticket size is still 2500 to 3000. So that is something where we have to reach out, because that narrative has not been given to the market. I think a lot of education is required. The ticket size has to move up from the existing, when whatever you are calling out, $25 to $30, if I put in the dollar terms, has to go to $100. So the moment we do it, and that is possible, the lot of people who are having a surplus money, they are not putting the money the way they should be putting money. So I think if the ticket size is taken care of, uh, this number will, from the existing number of say around 1.7 billion, it's really possible to make it 3 billion.
Why is SIP not going beyond T30? If I look at the concentration of the SIP data, 60 to 65% of the deposits are still coming from T25 or T30 cities. Why is that?
No, it's not that. I think we have to decode this data. Whatever we are getting from T30 is really SIPs. And when we look at the T30, it includes STPs also. When people put in a lot of money in liquid fund or savings fund, then they chunky amount, say 5 lakh rupees, 10 lakh rupees, 20 lakh rupees per month, they are moving to equities. So that is taking care. On second, if you look at overall also, I mean 60% of AUM is still from the top cities. So it's in the same line. But when I look at my own number, if I took a look at the SBI mutual fund number, actually we are getting more than 50% from T30.
No, my follow-up question would be that if I look at the demat account penetration, it's gone to accounts and to pin codes which perhaps are even which you have to really find them. Somehow SIPs is not reaching every pin code in India. Maybe it is the interest, or it is the comfort, or it is the technology.
Now see, Demat account opening, if we look at whatever the experts have been saying, has been done in a different manner. Different manner. One, of course, technology. Second, when it was done by the fintechs in a manner where people were incentivized just to open the Demat accounts. There are examples. Millions of accounts have been opened where there's no activity at all. Having those Demat account numbers, in fact, I don't look at Demat account numbers, because if I look at the data which is being shown, the 95% of the people who open Demat accounts and put in money, they have burnt their fingers, because they did it just for the heck of it. Second, it's so easy. Actually, things should be easier, but sometimes too easy a thing also creates a problem. The youngsters, they are just sitting on their laptop and just uploading their Aadhaar card and think the Demat account is open. Okay, but whether they are using it or not, that's a different story. You have to have a disciplined approach towards SAP. You have to have put in money every month. It will be triggered. It will go from your account. Opening account, when, like if I take example of my own son, he must have opened 5 Demat accounts.
Okay.
Then why are you opening? No, somebody, no, I just opened. He has opened.
Did you open one with SBI also?
No, of course, that is by default it is there. Na? That has to be there, because he cannot actually trade as per the when he is open. That's what exactly I'm saying. He cannot do anything. When he was student, my brother, he cannot do anything, but he just opened it. So I'm taking it that as an example. When his friends,
The numbers may look high, but it's not an active account.
It's absolutely inactive.
Okay, that's the take coming in from DP Singh, the Deputy MD at SBI Mutual Fund, and quite an intriguing, interesting chat out there as well. Let's get into BTST trial.